Some of it does appear to be transient or idiosyncratic.
Inflation has persisted longer than we thought.
You need a bit of a reset.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now the data is in and Zillow continues to get swept away with the wind as if they were a 2022 buyer. They appear to have absolutely no idea any longer about what's going to happen in the housing market. And I'm noticing that trend continue down the line with all of the big household names. They have absolutely no clue on what's going to happen next in the US economy. So what we're going to do today is we're going to analyze yet again what Zillow is saying. We're going to open up an article that's titled Mortgage Rates Decline After Inflation Data Below Expectations. And real quick, guys, what I want to show you is what last week's shed. Basically, I'm going to show you the last, a few of Zillow's reports about mortgage rates, and I'm going to show you guys basically the flip-flopping, right? So essentially they have just now become news reporters and they are no longer forecasting because how could they have any respect? So here's an article of August 17th. Look at mortgage rates decline. Let me show you the next article. Okay, here's August 10th. Mortgage rates increase. So the very last article, it's increased. Look at this next article. August 3rd, mortgage rates drop. Let me show you the next one. July 13th, mortgage rates move up on strong economic data. Let me show you the next one. July 6th, mortgage rates drop as investors eye potential recession. So, as you guys can see, Zillow has absolutely no idea what's going to happen next in the housing market, as do most people. So what we're going to do is we're going to read a little bit of the article, plus I'm going to access some more data just to show you guys what really is going on. We're going to look at treasuries. I'm going to look at some Fed charts. But remember, you guys, remember this. I'm not your financial advisor, even if I want to be. Even if you want me to be yours, I'm not. This is my personal YouTube channel, even though my bio is as an outworked American, frustrated renter, someone that wants to buy a primary residence, an expert in credit, an expert in loans, shark wrestler, but just for conservation only. Okay, I'm only doing it for conservation. I'm not killing them. And I absolutely love shark wrestling. Check out my other channel, Spartan Tackle Fishing, if you guys are wondering how real I actually am, because I love cinematography. And for that love, please like this video, subscribe if you haven't, hit notifications, share this, you guys. Comment below, help me stay encouraged. I absolutely appreciate everyone that is staying proactive and continues to empower themselves. So thank you and good job, guys. Now, let's get started on this article right now. Okay, so here's the article, and as you guys can see, it's very brief article that Zillow just put out, and here's what it says. Inflation data released last week came in below market expectations, resulting in interest rates declines and a rally in equity markets. The reality is, you guys, is actually rates went up. There was a brief blip where they went down slightly, but they actually went up. So we're seeing so much conflicting data. This is absolutely stumping so many people. They have no idea what's going on. That's why I keep telling you, look at the data, use your logic. Let's go on. Investors viewed this data as an indication that the Federal Reserve may not have to increase short-term rates as much as previously estimated. Again, a few days after this article, rates are back up. The 10-year is back up. I'm going to pull the 10-year up before we end this video. While both consumer and producer prices showed increases in July, the rate of increase slowed substantially. Even with the decline in rates, the Mortgage Bankers Association reported that mortgage applications last week were at the lowest level since 2000. That's insane. So lowest level at 2000, and that includes the subprime collapse. So think about that. So mortgage demand is lower than when we had the subprime collapse. You guys, this is absolutely shocking data. I really hope you're putting all this stuff in perspective. These are radical numbers. This is not seasonal adjustments. These are radical numbers here due to the Federal Reserve, quite frankly. Now, this goes on. Due to the slower demand and affordability challenges, given rising home prices and high mortgage rates. Markets will be focused this week on details in the release of the FOMC minutes from their July meeting and comments from several Fed officers later this week for any indications of future rate action. So again, what I get from this article is essentially what Zillow has become is a news reporter that has absolutely terrible opinions. Now, if you don't agree with that, change my mind. But as we can clearly see, and I already did a video on this, they drastically decreased their forecasting. They have obviously reduced their estimates across the nation. I mean, things are not looking good for Zillow. Now, I often say, Zillow tried to take over the housing market, and some people don't understand what I mean by that. As an industry professional, I get to see what goes on behind the scenes. And what Zillow did is an iBuyer program. They became investors, but they also started a mortgage company. So mortgage, realtor stuff, right? But plus, not only that, they used to sell leads like crazy. So they would have the consumers go to their website, the consumers would fill out a form, and then they would sell that information to either realtors or loan officers. So they took that money and then became essentially realtors and loan officers themselves. So again, you guys, when everything is going well, like it was the last 2 years, it's, in my opinion, it's a true insight into the future of our nation. So again, I know their intentions now, and I hope you don't forget what their intentions were, what their intentions are, and that is to make money. And we all know now that their estimate is absolute garbage. But when someone pumps in hundreds of $1 millions in marketing, it's going to become, like Zillow did successfully, it will become a household name. People will begin to trust that household name. And when Zillow and that household name starts to falter, everyone pays the price that followed Zillow. Remember that. Now, real quick, I want to show you once again why I believe that this week's article, if Zillow releases it, is going to say instead of mortgage rates going down, mortgage rates are actually going up. Take a look at the 10-year right now. Now, this is as of 8:22. This is in the morning, 10:48 a.m. But what I wanted to show you guys is the 10-year is now over 3%. And that's actually got a little higher than I thought it would, a little bit quicker. So we're probably, in my last week's video, I said I expect a moderate, not a slight, a moderate increase in the upward direction on the residential mortgage rates. That's going to come out this Thursday. So again, I believe it's going to be higher. But now that I'm looking at this 10-year, I guess 5.3, it may be even higher than that. I mean, this is really substantially higher. And if you look here, all of the other bonds are actually inverted, which means they're over the 10-year except the 3-month. But what's really interesting to note is the 3-month has been going over the 10-year. Regardless, y'all, we're in recession. Whether it's a technical recession or not, the recession is here. And really what the smoke screen is, all of the money printing. If it wasn't for all the money printing, I believe that the data would be way easier for everyone to understand. But because we have because we have so much conflicting data and so much greed and biasness in the market, that's why you're seeing so many people get this so wrong. Now, the way I want to end this video is I really hope you guys are getting the message that I am trying to give to you, which is this: you need to do the work yourself. You cannot rely on anyone to do the work for you. So again, if you're on the sidelines like me, make a buying checklist: square footage, lot size, bedrooms and bathrooms, and then find out around about what it's going for per square foot. Check the affordability index, check the average rental rates. Do research and continuously empower yourself and become an expert in your local market. Again, look at the rent, look at the affordability index, look at all of those things and watch those houses go down. Because here's the thing, y'all, and I really hope you're listening to me. If you've made it this far, sitting out like me, you are absolutely going to become a winner. And I don't want us just to become a winner. I want to maximize our winning ability because of all of the sacrifice, all of the pain that we've been going through, all of the people throwing derogatory comments, all of these things. It's now our time to win. So don't settle. Don't be going out in the market right now. Okay. Wait a little bit longer. Let the dust settle. Let's have bigger price breaks. I want the price cuts to be so clear that no one could say they're seasonal. A lot of people are saying these adjustments are seasonal. And while that's normally true in a traditional market, what's going right now is anything but seasonal. So again, I say, you guys, please, you're already winners, but maximize your winning ability, study your market, and continue to empower yourself. Please. That is what I want from you. And do me a favor, you guys, comment below. Let me know if you got value from this video. And as always, you guys, I appreciate you watching this video. And if you're out there investing in real estate, I do wish you luck and I hope you win.